Bank of Korea has raised its key interest rate by half a percentage point at 3% now. The benchmark rate is at its highest level in more than a decade. The central bank called the big hike necessary, saying inflation remains substantially above the BOK's target level. Our Choi Min-jung starts us off.
The Bank of Korea has raised its key interest rate by another 50 basis points. The decision was made during Wednesday's policy meeting in an effort to tame inflation. This marks the second time that the central bank has announced this record high increase, following a half percentage point hike in July. It's also a record fifth time in a row that rates have risen. With this jump, the interest rate now stands at 3%. It's the first time in 11 years that the figure has reached the 3% mark. The BOK's decision to deliver another big hike signals that South Korea is still struggling with soaring prices. Inflation in the country seemed to be easing recently as the rate remained below 6% for 2 consecutive months. But unlike the headline inflation rate, core inflation actually accelerated in September compared to the previous month, staying in the 4% range. Another factor to consider is the risk to consumer prices posed by the won weakening against the US dollar. Last month, the U.S. Fed announced a whopping 75 basis point increase, bringing its key interest rate to 3.25%. South Korea's latest hike narrows that gap, meaning the value of South Korea's currency may increase against the greenback. This could result in cheaper import prices, eventually making consumer prices go down as well. The Bank of Korea also said the GDP growth for this year will be generally consistent with the August forecast of 2.6%. But the forecast for next year is expected to drop from the original projection of 2.1%. Choi Min-jung, Arirang News.